Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host and Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On the show today, we're only going to talk about one stock the entire show because, did you know, no stocks traded yesterday aside from TLRY. It's true. Only TLRY traded yesterday. Nothing else traded at all. So we're just going to talk about TLRY. Actually, we do have some other stocks to discuss. We have some earnings. We had Amazon had a couple interesting headlines. We're going to talk about the banks. And of course, we'll take your questions from our chat. We won't talk about TLRY for the entire show. We promise. Joel, what is the word? And first of all, how was your fast? And what is the word in the overnight markets?
My fast was very good, very easy. Made it all the way till 5:30. And broke it in a traditional way with my wife and my good buddy with a shot of whiskey. That kind of feels good. Kind of warms your tummy after not eating all day. But let's just talk about does anybody care about the S&Ps or crude and gold? I mean, should I even? Okay, S&Ps are trading up 8.25 points here. Nice move in the S&Ps overnight. We are blasting to a new all-time high. Breaking out above 1775, had 3-4 highs there, 1875. So absolutely no resistance in this market. Bitcoin holding in there tough at 2750, just hanging 6400. Crude down 8 cents at 7.69. Gold getting away from 1200 up 240 at 1210.70. Silver up 6 cents at 1434. So let's bring in Dennis here. And Dennis, I mean, we've been around in the markets. We've seen a lot of different things here, but I think the trading action here, which is a subject of great debate in TLRY, just unbelievable.
Unbelievable is a good word for it. I'm still under the weather here, guys. This flu is actually worse here today, so it's a terrible bug. So forgive me for my nasally voice and my exhausted look here because I've been fighting this flu for 2 days here now, and it's a bad one. But TLRY, man, I'll tell you, that was just insane action yesterday. It's insane here this morning, too. I mean, it's already traded 410,000 shares up another 25 points. But let's just break down this action from yesterday. Stock opens at 220 or 235, I believe. Tanks quickly 60 points all the way down to 175. And then slowly through the morning starts to get those losses back. Then around 1:30 or so, it starts to break out. And by 2:30, this thing was just off to the races. It would actually hit the 300 high. And I'm not sure if you can show the trades here, Spencer, but we hit the 300 high right at 1450.47. Traded there multiple times and then started to leak. And then the leak turned into not just a leak. That thing just started to the bids start to disappear, and the thing went into free fall. And we went from 300 down to $151 in a matter of the next 20 minutes. Incredible action. The thing got cut in half in 20 minutes. And I mean, that's really what this is. It's just illiquid, and it's just moving, and nobody knows how to value the thing. Market makers are backing off. I mean, there'll be market makers in there, but they're not doing really tight markets, and they don't want to get too heavy in the thing on any direction there, so they're trying to flip in and out. But I tell you, man, that action from yesterday, absolutely crazy.
Yeah, well, we could talk about it from a couple different perspectives. First of all, whole number worked if you had enough guts to stick an offer out at 300. So that's one significant thing. But, could have said the same thing or hoping the same thing at 200. And I know you've been debating with people on this. Not just one person or one large trading group can instigate this kind of trading action. This is a combination of large funds, large traders, algorithms. I mean, how much do you think of the volume in this is actually not done by humans, but done by algorithms?
A lot of it. I mean, the market's moving so quickly. It's algorithmic. And we know all our market makers are algorithmic as well. They're not as tight in this, but they're out there. They're still, still making markets to a certain extent. They're just making them really wide. The borrow is tough. That's going to reduce the liquidity even further. But I mean, I forget what your original question was, Joel, but
I was just talking about like what instigates this kind of trading action, and it's just and we're just going back and forth. You mentioned some people.
Like how does it go from 200 to 300?
Yeah, I mean, it's also lack of shorts in the market. So when you get these pullbacks, okay, then you need new buyers, right? You need new longs coming into the market or new longs to support the stock. I'm sure there are people there, but when you don't have a good amount of short interest in there, then on these pullbacks, someone has sold it at 290 or whatever. It's hard to get the liquidity. I don't even know. I don't even want to do any technicals on this because I don't think they mean a damn thing. If you're long it, you've been trading it. Obviously, you got to get out when the momentum is on your side of going up. Trying to sell it. You probably had margin calls all the way up on people that were short. And then you had margin calls on people all the way on the way down. So, and you have these Robinhood people, buying, 67 shares. It's just a fragmented market. You just gotta get out when it's going up. And if you're long, and you got to get out straight down when it's going down. I'm looking for an inside day. How's that for a call today, Dennis? An inside day?
I think so. I'll go with you on that one. We are right in the middle between 151 and 300. I think it's a safe call there, Joel. I just want to expand on your thoughts there too. It's something you said on the pre-market show, and you kind of hit it at here too. Is just this isn't just one algorithm that's driving this higher. Imagine, and there's some people on Twitter there that are saying it's all manipulated. It's either a group of one individual, one algorithm that's just driving it higher. I mean, this thing traded how much volume yesterday, Joel?
32 million.
So if you got one participant, one algorithm driving this higher, I mean, how much money does this algorithm have? It's a $200 stock times 32 million shares. I mean, there's multiple algorithms trading this. I don't think it's any one algorithm that's driving this higher and totally manipulating, because I don't think they'd have the capital to do it.
No.
So I mean, manipulation happens in all markets. Is there manipulation involved in this? Could be. I mean, to a certain extent, there's some manipulation in all markets. I mean, obviously the unregulated cryptocurrency is a lot more manipulation than regulated equity markets. But I mean, this is just a matter of, we can cry manipulation, cry a lot of different things. This is just a liquidity event. The thing is hard to borrow. So you don't have, you have some shorts out there. Some of your market makers are going to have some, locates and stuff, and they'll be able to do it. But for the most part, your average Joe is not finding a locate to short on this thing. And when you start taking shorts out of the market, it reduces liquidity on both sides, not only the buy side, but for something you said. I mean, you don't have shorts bringing it in. You don't have shorts covering on the way down, because there's not a lot of people that are short the thing. I mean, maybe there's 20% float interest, but the float itself is small too. So, this thing's trading 500,000 shares through this morning. I'll just say all this is just liquidity. It's a lack of liquidity, and that's what really drives it. It's hyped. Everybody is talking about it. I mean, I look at my Twitter account. It is every other tweet. So there's people, all kinds of different people trading this thing right now. So when you have, a hyped story and the market's as illiquid as this, it's going to equal some really crazy moves. And that's what we saw yesterday.
Yeah, and I mean, if this is your fancy, if this is what you want to do, and this is you can have one good day, 2 good days, 3 good days, 4 good days, and then you could have one day. And George pointed this out in the chat, where all those gains are gone, and it's just controlling risk. So that's one thing. I mean, if you're ahead of the game and you're doing it, and you can trade the risk reward ratios, it's just hard not to get caught in something like this. Something that has $150 break in 18 minutes. The risk, what's the the reward? And
well, there's the reward, but that risk, like and Spencer was saying to me, he was surprised when I said I did not trade TLRY yesterday. I mean, this is not my style of a stock. I don't know how to control the risk on something like this. I don't know if you can. I mean, your slippage is going to be 10 points in some cases. That thing went the 300 to 150, especially from like the 200 down. It first halts on you. Because of volatility pause. We had 5 pauses yesterday. So when that reopens out of the pause, it doesn't reopen at the same price. I looked at the one pause. We paused at 166, and it reopened the 10 minutes later at 151. So, I mean, it's difficult to control the risk, especially when you get the volatility pauses in there as well. So this is, just people that are making bets on both sides of it. But I'll say this is the toughest stuff to trade.
Did it hit that 151 after another halt?
It reopened there right at the low, and then so the volatility pauses were obviously causing a lot of this, volatility. when you're halting for volatility, then you get, people both sides, and there's fear, and they don't understand what's happening because you don't see these volatility pauses that often. I mean, and it reopens. Everybody says, I need to get out now. But not only that, you probably, like you said, Joe, you probably get some margin calls in there too. I mean, even on the long side, if somebody came in and bought this thing at 280 or 290 and went 2-to-1 margin, or maybe even more. I mean, so some brokers give 4-to-1 intraday. I mean, you could seriously have some margin calls in that little range when it fell to the 150 points. So market making mechanics, bottom line, liquidity. Lack of liquidity here is what's driving this thing around. So I'm not a big conspiracy theorist here that says this was all manipulation. I think it's just simply a lack of liquidity.
Yep, and there's stocks in the sector, other stocks in the sector moving as well.
Yeah, there is. And let's go talk about one. Spinner gave this to us in the chat on Friday. I mean, he's been all over this one. So good job, Spinner. NBEV, New Age Beverages. I did trade this one a little bit after hours last night. Obviously, wish I would have held it. I did not see a 30% move coming here this morning. So congratulations to everyone here who is in this from our chat. I mean, this stock has went from $1.50 3 days ago. It's now $5.66 in full blast off mode here. NBEV. And I don't know where the party stops in this one too, but maybe it's got a little bit of room here. We got up to $7 back in April. Maybe it wants to go there. Maybe it wants to test there. But again, you're playing a little bit of a game of hot potato here now. You've got a stock that's basically tripled here in 4 days. So there's definitely some air below. You're going to have some wild swings, but I think we can test the 7.
Okay. All right. Trading at the highs of the pre-market session, that's 5.72. Your pre-market high is 5.84. Now over $5. So now it's a marginable stock, is something, it's not with every firm, but that's something to keep an eye on now. So you can buy twice as much now for half the margin. You mentioned that magical $7 level. 720 was your June high. So we'll keep an eye on that. And, hey, set aside the TLRY and, trade a $5 stock. So there's a lot of liquidity. Nearly 2 million shares have traded. Quick look at CGC, who got the party started with Constellation Brands. That one's been struggling a little bit. Got hit on the candle yesterday. A lot of consolidation. All-time high in that is quite a ways. It's up a little bit higher at 56.60, and then CRON. Yeah, that's another mover. That had a nice high yesterday, over $15 at 15.30. Backed off, trading 84 cents. So the close will provide support in that one.
Unbelievable. Some of these moves here in these pot stocks, the other ones too, but that NBEV up 30% here. That's incredible there too. And it's not a direct play, I don't think, but obviously they got some pot drinks going on. Anything you say pot. Remember how I wrote my blockchain filter back when they mentioned anything with blockchain? If you mention anything with pot right now, your stock's going to go into probably just blast off mode there. Everybody wants, a piece here. And if you mention, that's what you're going to start seeing probably happen to some of these smaller companies changing their name, not to, blockchain, but probably to pot chain or something like that. I'd imagine that's coming. We're going to see companies trying to capitalize on this and saying, oh yeah, we're going to get involved in marijuana. And you'll probably see those stocks pop significantly on that news. So might be something to write right now. Quick scanning the news, looking for anything to do with pot. Because if you get a company that mentions something that they're getting into the industry, as of right now, it's probably popping.
It always concerns me when you get a lot of movement on no news whatsoever. And we've had the companies they're all putting out PRs today smartly, but there's really no fundamental news. The only catalyst we have really is the upcoming legalization in Canada, which is a known event. TLRY had that news Monday now or Tuesday that they're allowed to import their study to UC San Diego, but there's no fundamental driver of this, and that's what scares me. That's what scares me when there's no clear fundamental catalyst.
It's just a story. I mean, right now, the pot story is what everybody wants to hear. It's what everybody's talking about. Nobody cares about any other stocks. Why we just spent 15 minutes? I mean, our chat, which, does a lot of things, that's all they're talking about too now, is pot stocks. And I can't blame it. I mean, money is being made here. Money is also being lost to a certain extent by some traders. But a lot of money is being made quickly there too. I mean, I've talked boring stocks for a long time on the show, 5-6 years. It's more fun to talk this stuff. So, I agree. It's more fun to trade this kind of stuff here too. That being said, I'm not sitting here making my living trading pot stocks. I'm sitting here making my living trading the boring stocks once again. If I look at my overnight portfolio, I was light last night. I got 20 stocks on, And the majority of those are not pot stocks. I mean, I got banks, and the banks we're going to talk about here in a second, but they showed some big time life yesterday. TLT got absolutely rocked, which is good for the banks. Utilities getting killed. Those are the relationships that I make my living from, is understanding those relationships. When TLT is going down, the banks are likely going to have a good day. When TLT is going down, the utilities are likely going to have a bad day. That is exactly what we saw there yesterday with the TLT getting the beats. Look at the XLU. It's not coincidence that the TLT was down significantly for the last 2 days, and XLU starts to fall out of bed. So, and you were asking me in the pre-market show the banks, yes, you had JP Morgan raising the dividend. That helped, JP Morgan itself. But that being said, these banks blast off yesterday because the TLT was getting the beats.
You're right. And also the XLU, as you mentioned, trading relationships. XLU took a big hit yesterday. JP Morgan raised their dividend, so that got everyone happy. SPOOs are just in total breakout mode here. Man, look at that. Gone. You remember my buy Rosh Hashanah and buy more at Yom Kippur?
Just buy.
Just buy.
That's what's working.
I was saying it a little bit tongue in cheek, but holy moly, here we are making new all-time highs. All right, Spencer, you want to rein us in here and cover some stocks in the news?
Yeah, first I'll just clarify on that JP Morgan thing. I guess the dividend was raised back in June. So I don't know if that was a new headline. JP Morgan did run up yesterday. I don't know if it was on that though. But just to clarify, so we did.
Well, it went up to 80 cents yesterday. They jacked it up from 53 to 80.
Oh,
so maybe they talked about raising it back then. But the headline broke yesterday. They raised the dividend.
Okay.
So,
all right. We had some earnings. We had some guidance. We had some ratings. I want to start with Amazon, just because they had a couple of headlines yesterday that caused some action. So Amazon, first headline there is that there was an EU probe into Amazon's use of data. Basically, the allegations from their European Union are that Amazon used their sellers' data to, or the sellers' data on their platform to basically undercut them. And so there's a probe into that. That was one headline. The other one is that Amazon is planning to, this is from Bloomberg, they're planning to launch up to 3,000 cashierless stores in the next 3 years. So a couple of Amazon headlines, one good, one not so good. Let's start with Amazon and then kind of work through. I think there are some movements in retail, so let's kind of work through it.
I mean, Amazon here is trading up 10 points. More of the overall market effects here, though. Obviously, just a market stock. If market's trading higher, Amazon is usually going to trade with it. I'm not seeing much of the retailers here today. I know you were mentioning it, but I see Walmart trading higher. I see Nordstrom slightly trading lower here. But I'm not seeing that much action of the retailers here this morning. Everybody's too busy trading TLRY.
Okay. I got my calculator out here. I just want to give one number and one number only here for Amazon, and you all know what it's going to be. We had that all-time high that was made at 20.50 when everyone was bumping their price targets. We had that breakdown at 18.87. Looks like we put in a little bit of a bottom there. We are starting to recover. That 50% retracement, I mean, that's about the only thing you can lean on here. That takes you up to the 1970 area. That's $30 away. So that's what I'd be looking at here. If you picked it up, you're looking for just a swing trade. Maybe not looking for it to go back to all-time highs here. 1970 is the level in Amazon. That'd be a 50% retracement. Sellers also ganged up at 2,000 after you hit that 2050 level.
All right. Let's talk Red Hat here. Yep. Earnings from last night. Stock is down 9 points here in the pre-market. Spencer, give us those details.
Yep, I was going to go to the earnings anyway. Red Hat reporting yesterday, Q2 EPS 85 cents was a 3 cent beat. Sales 822 versus $829 million. So a slight miss on that. The EPS guidance for Q3 came in line. The sales guidance came in a little bit light, 3.36 versus $3.4 billion there. So overall, an EPS beat, a sales miss, and guidance that was in line, but not a huge beat.
Let's show that chart there, Spencer. Maybe you can just jump on, start showing some charts. Just on Red Hat here. Joel will break down the after hours action because it was kind of a chop fest, but it's starting to leak even more here this morning.
You had a dip here in the pre-market trade, took you all the way down under 132 to 131.10. And now you just got some price discovery going around here right at 135. So I'll use that. I mean, your former low of the move here from July, June 28th was 130.71. So if you're really holding out for the downside, that was your low. Just consolidating here. No one really ready to take this thing up. Not a great trend heading into the report. You had a gap down. That was probably from its former report. So 135, it's just an area of price discovery here. But looking at the downside a little bit longer term, 130.71. That was your June 28th low.
Also reporting earnings this morning, we got DRI and we got THO. They're going in opposite directions. Let's go to Thor Industries here. It's down 8 points on its disappointing report. Spencer, give us the details. We'll break down the technicals.
Q4 EPS $1.67. That missed the $2.03 estimate. Sales of 1.87 versus 1.85 billion. So a slight beat on the sales, but a big miss on the Q4 EPS.
Stocks trade down $8 in the pre-market. I'll say you got some support 94 to 95. So I don't know if that's where we bounced here, but if I'm looking at it just from the technical perspective, I haven't looked at the pre-market chart on this. I would say you probably find some support in that area.
92 is your pre-market low, and like the same thing. Like we talk about this on the show, technical analysis. You can put your Bollinger Bands and your Fibonacci. You know, you can put a lot of junk on there. But if you pull up a chart like Thor here on the daily, look all at that. Dennis said between 94 and 95. To me, I'm just looking at like 94, and I'm looking at all those lows. You had a 93.63 low and a 94.21 low. So to me, 94. I'd be holding out if I was on the short or maybe looking to reinitiate along. There was a lot of congestion there. There was a buyer in that area. That's what I'd be holding out for. The longer it took to get there, the more you may have to buy this on as it moving higher, and that's obviously very hard to do. Keep an eye on 98. Since you made that 92, 98's been high of the sessions or high of the pre-market session. So above 98, look out. You got a long ways to fill the gap at 103.51, and a lot of people are scratching their head on this one because what did you hit 2 days ago? You hit 109.94. So big red bar. It was a red bar on that day. I think it still ended up positive. I think that was the Trump China day. So we'll see what happens. I like it in the $94 area.
DRI trading 5 points up here in the pre-market. So
huge beat. Everything was great in this report. Q1 EPS $1.34 is a 10-cent beat. Sales 2.06 versus 2.03. A guidance raise as on top of that. So a beat on the top and the bottom line, plus a guidance raise, raising their fiscal year EPS from $5.40 to $5.52 on the low end of the range. This is all-time highs.
Big pop here at DRI, trading up 5 points. It's bucking the trend. The restaurants. This is not all-time highs though. Actually, it is. You're right, Spencer.
Yeah.
Wow.
Oh wow. Yep.
Wow.
Quite
Olive Garden. Is it Olive Garden or Red Lobster? They still own. They spun one of them off.
Yeah, they spun off Red Lobster. They own Olive Garden, and people love the breadsticks.
Wow. So, anyways, they love it enough. It's up 123. You got a breakout here for the stocks. I can't argue with that. Restaurant stocks, a lot of them have been out of favor. This is not one of them. So, I mean, trend is your friend. It's still an uptrend. I'd say it's as long as it can hold the couple lows, 117, we'll say for the last couple of days, bulls are in control.
Pre-market high, I'll give you that as a target, 125.80. You've backed off since that level and have found support here at 122 even. That's where you've had a couple lows. Ganging up some sellers, they want to wiggle out at 124. So I'll use 124, first area of resistance, and 125.80. That's your pre-market high. If you want to wait and actually find real support in this one and buy it, the former all-time high was 120.98. So that's the former all-time high to fill the gap from yesterday. 119.85 was yesterday's high. So you could, yeah, that's possible to see that. That's only $3 away, but another one I'm not chasing here on the upside.
Chat is absolutely buzzing about this NBEV. This is an unbelievable move here too. It's now 623. It's going into parabolic mode here too. I said it might test 7 back when it was 550 20 minutes ago. It's now halfway there from where we were just talking about it. I think it's where it wants to go. I think it wants to test 7. I don't know if that's going to top it out there or not. That obviously is where I think you're going to run to your first major resistance point here, because that's where we were back in April. But unbelievable move here. Again, it's a hype stock, so you got to be cautious, chasing it here. But right now, this thing is off to the races. So again, I've given you perhaps multiple times, but I'll give it to you again because that was one of the best tips we've had out of our chat ever when he gave us to us last week.
Before the holiday and stuff, I got a little dirty in this one, and I bought some calls. So
oh, you did on FBEV?
I did.
He's almost ashamed to admit it.
I am.
What'd you buy?
I bought the 6 calls.
And what were they? What did you buy? What price was it? What'd you pay?
A little bit lower than this. A little bit lower than this. I'll probably be out of them and short by the end of the day. But I just, I just figured it. It's.
What day did you buy that? The 6 calls?
Yesterday
or 2 days ago?
Not yet. I hope not yesterday.
No. A couple days ago.
Oh man! So you were rolling the dough.
No,
there.
very small position.
Excitement.
Very small position. I just want to have full disclosure on that one. But
Bitter saying 4 days ago the 2.5 calls were going for 15 cents. Wowzers! I guess that's before I had to move though, so it makes sense.
No. And believe me, there was a spread in there that you think, oh, I'll split the spread. I'll go in there. I'll buy it. And then you try and split the spread, and then the offer disappears and stuff. So it was one of those trades you just kind of had to pay up. When I talk about, hitting bids, they don't hit bids when something's going up. Well, you got to lift offers of that one. So just for all you guys now, y'all can get out right now because I will put the top in the pot market. Look at that. It's already going, down right now.
You can sell the stock against those calls. Lock her in. Play the other side.
Yeah.
Sell the stock short. Can you get locates? I imagine you get locates on the side.
I haven't tried, but just
I'll go ahead and look right now.
Had to balance out some shorts in there, so I figured what would be a better long than a little NBEV. But okay.
Oh no, it is tough, Boro. I'd have to actually call around to get that. It's not easy, bro. I thought it was easier than that. Anyways, 3 million shares. Wowzers. That thing's off to the races. So we're 2 minutes away from balances here. We'll give you those in a second. There is some other news here. There's lots of ratings, actually, and we should talk those. We've got Square getting their price target bumped up at Stifel to 100. We got GE getting their price target knocked down to $10 at JP Morgan. That's why GE is taking a hit in the pre-market. Caterpillar upgraded at Baird. MTW upgraded at Baird. We got Rig 2 upgrades in a row, 2 days in a row, getting upgraded this morning at RBC. SFIX is one that our chat follows a little bit. It's getting downgraded at Piper here today. What else strikes your fancy, Mr. Israel? Did you see a few other ones?
Yes, I did. Did you mention Viacom upgrade at Macquarie? Did you? You did, I think. Ralph Lauren upgraded Piper Jaffray to neutral. You mentioned Stitch Fix. Skechers downgraded at Cowen to neutral. So where of those did you want to go? Because we just mentioned
there's so much movement here. So let's just talk. Let's go talk boring GE because JP Morgan lowering the price target to $10 here. It is trading down 20 cents in the pre-market. It's trying to show life, like it really wants to, but it is struggling at that 13. And if I go look at the book, and I'll just look there right now, it's just loaded in the book. I mean, these aren't coincidences when these things come in. And I'm just going to grab the book here, Joel. GE.
$12.99 was yesterday's high. Dennis, why don't we go into a little bit? I mean, we do different educational segments and things like that, but there's probably no better stock to talk about than institutional size, being out there in the market, and maybe it's time for the old story when didn't you buy or short GE 17 times or something like that?
And in the history of my trading, I actually traded 2 stocks exclusively for years. So if you don't want to talk about boring, I traded GE and Lucent Technologies exclusively, just those 2 stocks from I don't know, I would say 2001 and 2002, in those years, I traded GE 100 to 200 times a day. So, and that was when it was a $150 stock. We were back in fractions then. And I would sit there just scalping off levels. So we're sitting in front of the size. So I'd short in front of the size. And, we were quick back then, so I wasn't going to miss it. Now you can miss it because it's not as easy because high frequency trading has sped everything up. But I would sit there. I can remember there was one, big whole number. I don't know, say it was $150. I can't remember for sure. It would go up to, it would be the TD down because it was in fractions back then. So it'd be like 149 and 15/16. And I remember I was bringing it in for 50 cents every single time. It was just chopping around. It literally did that. It would go up to like the 149 and 15/16, and then it would sell out to like the lower 149s. It would bounce back up to the 149 and 15/16, and then it would sell back off. And I think I did it, successfully like 17 or 18 times in a row, making 50 cents, making 60 cents, making, and it was fractions back then. So I'm making a half. I'm making 3/8. I'm making a half. You remember fractions too. I liked fractions back then.
Those are the best.
Yeah. So, and when you were starting, Joel, it was an 8s. So, it was even,
man.
You're talking 0.125. So that was a minimum 10. So, but, you find these spots and you find these institutional size, sometimes they get up there. And I still trade that way to a certain extent. I had to trade in AT&T yesterday. So AT&T had a huge buy balance yesterday. So the TLT was weak and AT&T trades like a bond. So I already had in my head that AT&T is probably going to, maybe be weak. Well, it opened up 30 cents right into resistance because there's a huge seller at 34. Opens at 33.93 or 94. I take like 1 cent of heat basically, and it went straight down. And scalper bled me. I cover a little bit too quickly, but I think I was quickly able to take 20 cents out of that. And it's how I make my living. Is just leaning on the right numbers of the right size. And right now, I'll tell you, GE has a brick wall at 13. 500,000 shares in the book there. Not only that, at 1301, there's 40,000. At 1299, there's 35,000. It's just littered with size there. So it's probably going to take an analyst upgrade or something to really push it through there because it takes a lot of money to push it through that price. And that's what's visible. I mean, there's a lot of institutions that aren't showing their hand too. So just because you see 500,000 shares in the book at 13, there might be a couple million there. It could be, just showing the tip of the iceberg. So, you find these big psychological levels of these big, whole numbers, and they sometimes put a lid on it.
Okay, with only, just going back with 8s, there were only 8 places within $1 you could place your order. So the liquidity had to concentrate at one of those 8 levels. Then you went to 16ths. I mean, still, hey, 16 levels. Now you have pennies and sub pennies and sub pennies. So all the people trading at 1299.968. And what Dennis is looking at here, as he's just looking at the risk here, shorting AT&T in the upper 90 handle yesterday. And I don't want to say worst case scenario because there could be news. You could miss the size. Someone could pull
you miss the size, but I'm looking at I'm probably risking the nickel. I'm trying to risk a nickel. And there's a good chance I'm going to be able to cover there. So I'm getting a perfect scenario really where it's opening up, which, on this day, TLT is down. So I think AT&T is probably going to be weak. It opens up 20 cents on just a huge buy imbalance. So for whatever reason, there was one institution that wanted to own the stock. Well, they were uninformed because it was going to probably be a bad day, and it was for AT&T. So they weren't watching, what they should be watching. AT&T trades like a bond. When TLT gets hit, AT&T will typically go down. So it's understanding those relationships is how I make my living. It's how I've been in the business for 19 years. It's how I haven't had a losing month in 19 years. It's just the relationships. So not trade stuff like TLRY. Yes, you can get rich fast on that stuff, but you can get poor quickly too. This market is all about relationships. Your high frequency traders are all trading relationships. They're leaning on orders. They're leaning on size. They're understanding the programs, or understand the different intricate relationships there. And that's how they are very consistent. It makes your trading much more consistent when you're trading relationship-based strategies.
And who was it? Tom, and what was his brother's name that they exclusively traded GE for?
Tom and those guys are crazy behind me. And they had the programmable keyboards in 2001, so they're just like one button. I mean, it was quick. Tom and what was his name? What are their names? They were so quiet. They were sitting behind me, but they would just trade GE, and they were doing like, what was it? Like between those two guys and Paul, because Paul was trading GE exclusively too. Weren't they doing like 5% of the volume or something crazy?
Paul tried to do it with some other stocks, and then I'll tell you.
They were doing like 3 to 5% of the volume every day on GE, which was crazy. If you think about that, you got one guy. Well, I'll tell you, I did the Viacom ERP, like it's just telling stories. The VIA versus the VIAB, and the VIA was the more liquid one. A lot of days, I was 10% of the volume on VIA, 10%. So if you were buying or selling, this was like 2003, 2004. If you were buying or selling Viacom, the more non-liquid one, there was a 1 in 10 chance you bought or sold it from me. So I mean, we were traders out there, like 1 in 10. And you know, bright trading as a whole back in 2001, our 400 guys, what were we doing, Joel? Like 2% of the volume of the New York Stock Exchange or something?
Yep.
Our firm, if you were trading New York Stock Exchange stocks in 2000 and 2001, there was a 1 in 50 chance that you bought or sold your stock from somebody in our firm. Yeah. We were doing 2% of the volume on the NYSE every day. And we're not nearly that big now. High frequency traders have pushed us out of market making. So a lot of our traders are doing longer term strategies, doing some different things. But I mean, we're basically what we were doing. We're liquidity provision. We were making two-sided markets and, you know, profiting from the spread. That's what it was back then. And it's not that way anymore because obviously all liquidity provision is pretty much provided by high frequency traders. They're just too fast, hard to make money in the market making role anymore.
And, you know, also, you know, an edge that has long been gone. I mean, we used to have the S&P squawk, you know, getting the directs, you know, the momentum from the floor and stuff. And, you know, I mean, it eventually got to a point where, you know, the squawk, I mean, I don't know. I don't know if Ben still does it. Maybe we should have him on sometime and see, you know, how relevant it was. But, you know, catching the turns in the market, you know, the big size coming into the market. And it was just more the sound on the turns that we used to listen to than all the chatter. But that eventually got taken over by the electronic trading. And that's where it is now. All right. S&P is 25.5. This is the D's contract up 10.5 points. Just want to caution everybody. Tomorrow is a quad witch. So you do see some moves. You know, the options expire on the index tomorrow on the open. So you see extreme things, a lot of position squaring here. Just wanted to make a note of that. We got way away from the ratings when I asked you about trading size and stuff here. Spencer, is there some other ratings that we should perhaps take a look at that are moving stocks today?
Let's look at let's go back to my list here. Let's just look at Ralph Lauren. Yeah, they're not really moving. Let's look at SFIX, Stitch Fix.
Sure, that one trades.
Yeah.
That's an active one that is obviously, you know, talked about a lot too as well. So it had a tough day yesterday, tough candle, kind of like the breakdown candle yesterday. Now you get the follow through downgrade on it from Piper. I'd say yesterday's low is critical. It needs to hold 43.80. So we might test that today. If it can hold there, then you have the potential for the little double bottom. Technical traders like that setup. But I would say that's your first bogey there is 43.80.
Hey, Dennis, I'm not going to ask you. I'm asking Spencer. What the hell do they do? Stitch Fix.
SFIX.
I look this up like every quarter. I never remember. They're a software. They're a software provider. Yes, they're a software company. That's what I remember.
Do they do anything with marijuana or pot? Because that's what
they're all going to start doing.
Not yet.
No, not at all.
Headlines breaking. It's like we have a new pot drink, or we have a new. You know, if I was all these restaurants, stocks that are all out of the gutter. Like I would be coming out and saying, "Hey, we're no. edibles, pot edibles at your meal or something."
Long Island blockchain is going to be called Long Island Pot Company now. Is what I heard.
Oh yeah, they're going to change the name for sure.
Wait.
Long Island Pot Company.
Stitch Fix is the person. I remember this now. Stitch Fix is the personal fashion company. It's like a subscription service, and you basically pay to have like clothes delivered to you, and you can keep them or return them.
So why did you tell me that? Now I immediately want to short it. And obviously everyone can tell by what we wear that we're not part of that. So, I mean, you know, if you're not, you know, if you don't want to shop on your own, I guess.
Online clothing store.
I don't know about that. Dennis mentioned that low from yesterday, a 43.80, and we're traded down a $1.80 here. I might give it a little bit more room than 43.80, and the reason I would is I see a low at 43.04. I see a couple other lows, 43.16, 43.51. So, you know, if you're leading on that 43.80 as a stop, you're trying to buy it there. I do see some additional support in the lower 43 handle. Obviously, you could figure.
That's what I think too.
Yeah, I'd give it a little bit more room. On the upside, when a stock has a big down day like that, man, a lot of people are hoping to get out at scratch, getting out at even. That's 47.11. That's a $1.80 away. You never know. You might just get a quick blast up to there, but that would be your resistance. And see what happens in the lower $43 handle.
jump over just to a couple other stocks there, which I was just looking at. Under Armour did give some guidance here today. Spencer, give us the details. Under Armour's trade up 2%.
Yup, they narrowed their range. They basically raised the lower end of their guidance. So they raised the fiscal year EPS guidance. 14 to 19 cents was their range. Now it's 16 to 19 cents.
What do they make? How much money do they make a year?
They make shoes.
No, how much?
No, how much money do they make a year? I said how much money. I don't know what they make.
Oh my gosh.
They make horrible
How much money? How much money? I'm trying to figure out a multiple on this thing, like going forward multiple. What are they projecting like for earnings next year?
Oh, no.
I know you have all this in the pro.
I know, I'm looking.
I'm too lazy to go look it up right now, so I put you on it.
Give me a minute.
Because the reason, and a lot of the retailers have really gone, but this is one that really hasn't. And I think a main reason for that is traded with a higher multiple always, and now the growth is slowing. So it's like the value guys like me won't touch it, and the growth guys are just not interested, and that's why it's really underperformed. I mean, compared to the other retailers that have had a significant rally in the back half of 2018. This really did, but it's leaked it all back. So really, when you look at it, it kind of looks like, 15, 16 bucks, maybe you're buying it on the cheap, but if it's the PE still too high, value guys like me aren't going to buy it.
Last fiscal year 17, the earnings per share came out to, they lost what's that, 6 cents?
They lost money last year?
Yeah.
Anyways, he's trying to do all the math here fast. I think the bottom line here is when I looked at this 6 months ago, it was traded with a P multiple I thought of 40. And I was like, holy cow, it's still too high. It's still too expensive. So I don't know if that's coming here now. It's obviously difficult to calculate when they are losing money here. But they said they're supposed to make, 17 cents?
I was reading the wrong column. Well, last fiscal year, I was reading the estimates. They made, that's 19 cents for the year.
So it's trading with a multiple of 100 when they're making 19 cents. So that's not good. Obviously, they can make more money than that. So maybe it was just a down year or whatever. But let's just say, they make, and I don't have the estimates in front of me, but I think this is just trading with a higher multiple than a lot of the other retailers. And again, it's a matter of it's not growing earnings like it was, and the value guys won't touch it because the multiple's too high. So you get stuck in the middle of nowhere and it's out of favor.
Oh, man, you got some overhead supply here in a big way. You did get a pop up to 1969. It's good news. I don't think it's super fantastic news. Couple areas of interest here. And we're trading at 19 and a quarter right now. That's up 49 cents. Well, you got to double top it. Let's call it 1935 here. So this is what you want. You're buying this thing off the open. Boom. You don't even want to blink at 1940. You want to take out the 1973 and you want to test the other quad. Oh man, 2050 is a brick, or 20 and a quarter is a brick wall here too. So man, it's just, negative momentum, overhead supply. If you want to play the momentum on this one, you don't even want to be down 25, 30 cents off the open on something like this. You want to open up, keep going. How's the volume here? A little bit of volume traded, nothing great, but a lot of overhead supply in Under Armour. It's certainly no Nike. Nike made an all-time high yesterday, right?
Yeah.
Trading up in the pre-market. Boy, oh boy.
It gave it back. It was an ugly candle for Nike yesterday. There was a lot of stocks, actually, that did not have a great day there yesterday. Quietly you see the Dow up, but there were some individual stocks that were not having good days yesterday. So a little bit of a weak candle there yesterday at Nike. But you've got major support down below here still too. Stock is still in a clear uptrend here. So just as before, when it got down to 79, I thought it was a buying opportunity. I think any significant pullback in Nike here probably gets met with some buyers, especially in the lower 80s.
All right. There's a couple tickers from the chat, and I had one from the news desk. I wanted to. Can we first look at this one? UBX, Unity Biotech. There's no news on it. But it's had a really, really bad couple of days here. That'd be an understatement.
There's no news.
No news.
Wow.
There's been a few stocks here. Our KRYS that we were in for a while too got hit pretty hard. Some of these smaller biotech stocks not had a good couple of weeks. So UBX, it's giving back its gains there. I don't follow this story at all. I know nothing about this company here. I'll just say you get down to your 16. That's where it broke out from originally. I think you got support down there.
Yeah, a couple ugly bars here. Not super significant volume here. Actually, the biggest volume day was on an up day. This was about 5 days ago. Dennis mentioned that $17 level. I mean, he's talking about 16 for support. I see there was the low from yesterday was 17 even. I see a 1698, 1699, 1675. Boy, there's a lot of support. I'd say between 16 and 17. I could spot about 5, 6 lows in a row. So that'd be your potential area of support. Best thing this could do would be stop going down for a day and maybe have a couple of days of consolidation. But if you're trading a biotech and you're not seeing news and it's moving like that, that means that there's news coming out on it pretty soon. Maybe check for some trials. The other thing that you might want to check is, does someone with a competing drug have good information? And if they came out with good statistics or something, that could be. But always with biotechs, it's in the news when the trials are coming up. So haven't done my research on that. You should before you hop into the stock block.
A couple more one that we had in the chat here. First one mentioned is Comcast. We talked about it briefly yesterday. They're going to be part of that rebalance there on Friday with the S&P sector rebalance there. Also, Comcast is bid for Sky, the British TV service, is going to an auction with Fox. So a couple headlines there related to Comcast. Let's look at the chart.
Hey, Dennis, are you going to get down and dirty in that rebalancing, or is it just too
I'll probably trade it. Yeah, I got to research it a little bit more there, though, too. I often just trade, if there's, big moves there. I often fade the moves into the close and then try to get the the relief pop on the Monday. So if something gets sold off heavy into the Friday close, I'll often play it over the weekend, buying it into the close and holding it and hoping for the relief pop on Monday. So I often fade the moves if they are significant. Sometimes they're not. Sometimes it's already all priced in and they're not as big as you think. But if you get outlier moves, and obviously we're going to have a quadruple witch there too, I do fade those moves.
Comcast running into a little bit of trouble here. 37.94. That was the high from yesterday. Hit that early in the session. Had a $1.50 range. This one has just clawed its way back. You're at your highest level since March of this year. And your March high was 37.22. So I think best case scenario, you hang in a 37 handle for a couple days, and then you get up. Maybe some big size looking here at $38. That's why I maybe had the 37.94 high. This trades a lot. 220 million yesterday. And this is kind of like your this kind of went opposite of your XLU and your TLT, because they pay a pretty good dividend, correct? Comcast, not a huge dividend.
2%.
Oh, really? Okay.
It's not a huge one, yeah.
Yeah, 37.32. That was your.
I just think long run, with the Netflix and everybody, like I contemplate all the time, getting rid of the cable TV, because I find myself watching Netflix or just watching on the internet. I mean they're fighting us. It's not even cyclical. They're fighting a secular thing here, where there's just going to be less people paying for a TV or paying for cable. There's unless they go a la carte, which maybe they're going to eventually do, so you can subscribe to different channels that you want. Like in Canada, I would love to still subscribe to some of my sports, because I honestly would. If I didn't watch sports, I would probably cancel my cable TV, because I could get all the movies and all other stuff on Netflix. The series are pretty good. But because I watch sports, that's probably, and you can watch streaming, but it's not as good a quality, and I want to watch my quality. So I would say if I didn't watch sports, I wouldn't need cable TV.
Sports is kind of the last frontier. It's the last thing that hasn't really migrated over to the streamers yet, but it's happening.
And it's not good. I mean, I watch
stuff
on Twitter. It's choppy. It's streamed. It's not the quality I want to watch. It's not there yet. It will get there.
We're getting there though.
It's gotta get there.
We're not more than a couple
years off. And then once that happens,
yeah.
What about like your Dish and your Comcast and all that? I mean, maybe they're gonna make some money still. There'll still be some subscribers, but AT&T with DirecTV, I mean, there's gonna be less subscribers going forward for that stuff. So I just think long term, it sounds difficult to be investors there.
Well, the trick is to get people, if they're not going to pay for whatever $140 a month for like 800 channels, you get them to pay $20 a month for like 20 channels, and that's what they're all going to do. So that's the game plan. So that's the story. If you're an investor in Comcast, is how do you get people to pay you $20 a month for like 5 of your channels?
But that's going to be a significant revenue decline. How much do you pay for cable right now?
0.
You don't subscribe to cable. Joel, you have cable.
Yeah, I pay a lot.
What do you pay? Like $80 a month? I mean, you package it up, you get your internet probably with it too. But that the bill's expensive.
Right.
So if they start, I just think revenue is eventually going to decline. If you can get $20 a month, but they're getting 80 from a lot of people right now. So, and I watch, 5, 6 of those channels. You get hundreds of stations, but I don't watch most of those. So I think it's real uphill battle long term for a lot of these cable companies. I mean, yes, they still are making money off the internet in different ways, but that's getting cheaper too. That's getting more competitive as well.
Let's just make a quick look here at the gold contract. Jazz is asking about at GC. That's a front month gold contract. That is, we're already rolled into the December here, and basis the daily charts here, I see a long consolidation period. Made that low under the psychological 1200 level at 1167, and basically you've been between 1200 and 1220. Give or take a few bucks here since the end of August. So I'd wait for it to play above 1220 here. You could have a breakout to the upside, below 1200, maybe get back down, test the lows and move. I just don't see, where's the catalyst here. I mean, I know a lot of people follow the dollar here, but gold has not had a good year. Just finding support, but if Nick was here, I know Nick's been fighting this one going up as well. But right now, it's just in a trading range. D's gold between 1200 and 1220.
So showing some life, but I'm still sticking with my gold. I think eventually gold is in triple digits. So I don't like, I have almost no gold investments myself.
Nope.
So I have a little bit, probably just from old, but probably way less than 2% of my portfolio, I would think, is gold.
Yeah,
maybe 1% only.
I don't think I have any. I think I've just given up on it.
Yeah, I probably should just dump it all. It's been terrible. Whatever I've had, they say, it's insurance. There's better ways to insure yourself. I still like that Virtue Financial as insurance, market insurance there too, because we saw VIRT, what happened when volatility picked up and the market started to tank. That VIRT took off, and that's because high frequency traders going to make more money in more volatile environments. So I like Virtue Financial as an insurance
versus
play.
Gold. There you go. There's
more than gold. I do, and this is and not saying, but everybody says you got some gold in your portfolio for defense, but it hasn't performed well when we haven't had any real worries. So maybe if you really got some serious concerns, when we back into a financial crisis or something, gold would probably catch a bid. But I just think it's long-term not liked. Why? People aren't wearing it nearly as much. If they're not wearing it as much, it's not a great store of value because it continues to decline here. I just think, I don't know the reason.
Okay. All right.
To be an investor there.
Yep. S&P futures at a new all-time high here in the pre-market session. Had a nice bump. I think it was like right around 8:30. Your pre-market high 2927.75. So there's your only number. Above that, trading new all-time highs. Not much resistance.
Let's go Chinese stocks. They're all taking off.
Okay, let's go.
This has been a nice rally here. Alibaba up again. It seems like every morning you come in, Baba's catching a bid. It's up another 3 points here this morning. It was up 3 points yesterday as well. I think the Chinese bought. I said this yesterday. I think it's it. I think we saw the capitulation move down back on September 11th. Alibaba got down to $152. You can look at the FXI same day, and we've rallied significantly. You can look at the emerging markets ETF. I think there's money flowing into this now. It's looking for the cheap. I think the lows are in. So I'm a buyer pullbacks on these. I'm not going to chase. I think I'll get another shot, but I kind of like all these things. Baba,
the level I'm really eyeballing here on the upside is the $168 area. You had a high at 68.28, another high at 67.22, another high at 68 even. So that is capped. The rallies as of late, I think you got some nice upside if you can clear 168. If you want to go a little bit longer term here, you basically had let's call it a 60-point move. So you tack 30 onto that 152.85 low. That would take you up to the 180, 185 area, which is not out of the realm of possibility here if you're going to do some kind of retracement of this move. Baidu, the one that kind of started caving ahead of everybody else, that's trading up. That has up in the pre-market trading. Just you get into a gap area above 237.72. That was a gap that you had from early August. So, I mean, they look the same here. They've had the drop, a couple stabs at the low, and now catching some momentum to the upside. If we don't have more tariff talk, I mean, which could happen basically at any
it can happen any time.
Yeah, any time of day or night, but definitely.
So you do have headline risk here.
Yep,
but
for sure.
If they get a deal in place too, like a happy deal, which I think eventually they do, it could get more of a pop on these things. So I kind of like it. Let's look at some of those other stocks, the Chinese stocks that were hot before, like HUYA, IQ that we talked before. But all those, this HUYA is trying to form a bottom here in the 25 handle. So you've bumped that down against it multiple times. I think if it does take it out, I wouldn't want any part of it. But you got a level to lean on now. I mean, I'd take the low from, say, 6 days ago, that one candle, 24.64. So if you're buying it here, it's up. I know it's up $1 or 80 cents in the pre-market, so it's hard. But as of yesterday's close, it could have bought 25.64. I mean, risk 80 cents. There's upside. IQ started to show some life there yesterday. Nice little candle. BILI has been showing life really since its earnings report, bumping its head up against 14 a few times, but just can't seem to get over it. And then the other one we used to talk about was SOGO, and it's starting to show a little bit of life here too. So you do have some lows here to lean on. I don't know. The trend is still not your friend in any of these things, but if you're trying to call a bottom, some of these things aren't that far off.
And also, the run in these things is not going to replicate the run that it had before. The fact that, you do have reference points in this, these areas. You do have areas of resistance. You have people who were bought. You had people that were trying to buy on the decline as well and are, looking to get back. So no move replicates itself like TLRY here, 227. I mean, going back up to 300 now, you don't think some people are going to be lightening up along the way? The market has history, price history, and when you have a decline like you did in these stocks, I mean, they could back, they could mount decent rallies for sure, but it's not going to be like that air that you had previous on the upside.
We got about 2 minutes here. Just give you quick imbalances here. So like we were talking, Alibaba, 168,000 to buy. So the party does continue there. GE, we already said the catalyst there is JP Morgan lowering the price target, 338,000 to sell GE. Walmart, 71,000 to sell. Despite that, the stock is trading higher here in the pre-market, but that's a fairly large imbalance there. So I'd just be cautious maybe at that one. The banks are catching a bit here again this morning. TLT is a little bit weaker. You often get the 2-day move, so I'm not surprised that we're getting some follow through in the banks. I got a bunch of them paired off, but I'll be getting out of those on the open as well.
Okay, and here just other stocks of interest. Bank of America had that nice day yesterday. Gave you a quad bottom to lean on here, and then just under 31, nice whole number. That took off. That's trading up in the pre-market. 31 was a level. You had a couple highs. We are opening up to at 31.24, up 24 cents as we speak here. That was your September 5th high. And just take a quick look at Apple here. I mean, let's go a whole show without talking about that. That's up 226, and it's had a couple declines, but that 216, 217 area seems to be a major area of support in that one. And also, if you want to figure a little retracement here in Apple, you got nearly to 230. You had to break down to 215. So that's 15-point move. See what happens at 222.5, 223. 222.95 was your 3-day high. All right, Spencer, you want to wrap things up and preview the final show of the week?
Yeah, Dennis, you made it through. We appreciate it powering through with us.
Yeah, I'm hurt.
Hopefully you feel better.
Some total cold flu, that stuff helps, but it's been a tough one.
All right, hopefully you feel better. If you missed any part of our show today, you want to catch any part of our archives, you can go to our podcast on iTunes, SoundCloud, Stitcher, TuneIn, Google Play, or just rewatch the show on youtube.com/Benzinga TV. Thanks to everyone who joined us in both our chats today on YouTube and premarket.benzinga.com. Hope you all have a good rest of your day. Real quick, as always, everything we say on this show is meant for informational purposes only and not meant to be investing advice. That's going to be it for us, folks. So have a good day. It's raining here. I hope it's not raining where you are, and I hope you join us again on Friday.